Hello, dear listeners, and welcome back to Book Summary 5, the 5-Minute Summary channel. I'm Sammy, your host. Today we're diving into The Bogleheads Guide to Investing, written by Taylor Larimore, Mel Lindauer, and Michael LeBoeuf. Inspired by the investment philosophy of Vanguard founder John C. Bogle, this book serves as a practical, no-nonsense guide to investing for long-term financial success. The book emphasizes the importance of simplicity, low costs, and a disciplined approach to building wealth. Let's explore the key ideas and strategies so you'll feel like you've read it cover to cover. The first principle in the Bogleheads Guide to Investing is living below your means and saving consistently. The authors stress that the foundation of successful investing is having money to invest in the first place. This requires making a habit of saving a portion of your income regularly. They suggest saving at least 15 to 20% of your income and living frugally so that you can build wealth over time. The key here is discipline and consistency. Small, regular contributions add up to significant sums over the years. The book advocates for long-term investing and discourages attempts at timing the market. The authors argue that trying to predict short-term market movements is nearly impossible and often results in poor decisions. Instead, they recommend a buy and hold strategy, where investors purchase diversified assets, such as index funds, and hold on to them for the long term. This approach minimizes transaction costs, reduces emotional decision-making, and takes advantage of compound growth over time. One of the core messages of the book is keeping costs low. The Bogleheads are firm believers in low-cost index funds, which have lower management fees compared to actively managed funds. These index funds track the performance of the broader market, such as the S&P 500, and because they don't involve high-cost managers trying to beat the market, they tend to have lower fees. Over time, these lower costs result in better returns for investors. The authors point out that even a small difference in fees can significantly impact your long-term gains due to the power of compounding. Another key principle is diversification. The Bogleheads recommend spreading your investments across various asset classes, such as stocks, bonds, and international funds to reduce risk. By diversifying, you avoid putting all your eggs in one basket, which helps protect your portfolio during market downturns. They also emphasize the importance of adjusting your asset allocation based on your risk tolerance and time horizon. Younger investors can afford to take on more risk by holding a higher percentage of stocks, while older investors approaching retirement may want to shift more towards bonds for stability. The authors also introduce the concept of rebalancing your portfolio. Over time, as some assets grow faster than others, your portfolio's allocation can become unbalanced. For example, if stocks perform well, your portfolio may become more stock-heavy than you initially intended, which could expose you to more risk. Rebalancing involves periodically selling some of your overperforming assets and buying more of your underperforming ones to bring your portfolio back in line with your original allocation. This disciplined approach ensures that you're not taking on more risk than you're comfortable with. In the Bogleheads Guide to Investing, the authors also stress the importance of tax-efficient investing. They suggest using tax-advantaged accounts, such as 401s, IRAs, and Roth IRAs, to minimize the amount of taxes you pay on your investments. Contributions to these accounts often grow tax-deferred or tax-free, depending on the type of account, which can significantly boost your long-term returns. The book encourages investors to take full advantage of employer-matching contributions in retirement accounts, as it's essentially free money for your retirement savings. One of the main themes in the book is staying the course, which means sticking with your investment strategy through market ups and downs. The Bogleheads emphasize that the stock market is inherently volatile, but history has shown that it trends upward over the long term. They warn against making emotional decisions during periods of market turbulence, such as selling during a crash or buying at the peak of a bull market. Instead, they recommend staying calm and sticking to your long-term plan, regardless of short-term market fluctuations. The book also discusses the importance of estate planning and insurance as part of a comprehensive financial strategy. The authors encourage readers to think about how their assets will be passed on to their heirs and to ensure they have appropriate life and disability insurance to protect their families. Having an estate plan and the right insurance coverage ensures that your financial legacy is preserved and that your loved ones are taken care of in the event of an unexpected tragedy. The final message of the Bogleheads Guide to Investing is that successful investing doesn't have to be complicated. By focusing on key principles like living below your means, investing in low-cost index funds, diversifying your portfolio, keeping costs low, and sticking to a long-term strategy, anyone can build wealth over time. The book's simple, straightforward approach makes it accessible to investors of all experience levels, from beginners to seasoned professionals. In summary, the Bogleheads Guide to Investing provides a clear and actionable roadmap for achieving long-term financial success. By following the Boglehead philosophy of low costs, diversification, tax efficiency, and staying the course, you can build a solid foundation for your financial future. Whether you're just starting your investment journey or looking to refine your strategy, this book offers timeless advice that can help you achieve your financial goals. Thank you for tuning in to Book Summary 5, the 5-Minute Summary channel. If you enjoyed this summary, please subscribe, like, and share it with your friends. Until next time, happy reading.